this was recorded. Sound check. Okay. Now it should be recording. Check, check. Yeah. Okay. So on the 15-minute, let's see if we have any divergences whatsoever. So far, there's the Nasdaq is trying to knock out a very dense price action here, having a hard time, which is pretty normal. But again, as long as it respects the bearish PDRAs, it shouldn't be as hard. Like as long as it stays below the range EQ on the intermediate time frame, I think we'll be looking at least that thick price action low, or I mean technically here, but step by step. So far, what I'm seeing is on ES, there is 3 drives here. 1, 2, 3 towards range equilibrium. That's massive. It's also rejecting. So here on the Nasdaq, the same deal. 1, 2, and the third one is here into range equilibrium. I would really expect like at least one more push lower from here, especially because like a structure shift. I mean the analysis is there, but God knows what happens at this point. You see now it's inverting the gap. All right. So yeah, from the Wednesday's trap all the way to the Friday's high, make sure to annotate the range equilibrium of that range, of that dealing range, because that's going to be very defining for the directional buys. Takes a while to learn for sure. Start with Larry Williams, then go ICT stuff. I really don't know what Larry Williams was trading. I never read about his technical analysis or whatever. I've heard of it, but never really digged into it actually. Alright guys, I'm gonna skip to other assets from here. Crude oil, which was spot on. Just pretty spot on. Range bound a little bit from previous day low to high, couple days, rallied into the premium fair value gap on the daily and had a really big reaction on Friday. I think we're looking at, so now it formed a new sell model on, I think it's on the hourly, yeah. So on the hourly, you can see the smart money reversal here. It's consolidating, price stalled above it, left equal highs though, that's the only part, but had a really strong reaction. So I think we're looking at the daily lows, the daily discount, deep discount in fact, which is at 74.28. I think it's gonna go there at some point. This is also engineered liquidity, which is why I marked that level. Now it could bounce from there just because there is a BPR, which is a significant level. Like there's a BPR along with a very thick dense price action, so it's probably going to have an initial bounce, and that bounce and the price action afterwards will define its faith, so to speak. But intraday, let me see on the hourly, I think it's going to look better. Wow, there's no swing low on any time frames. So far, because there's no swing low here, the smart thing would be to wait for that swing low initially and then look at this range here. And as you can see, the range equilibrium of the very last range is being respected IFED there. So I think it's not going to violate that high, and it will rather go down into the sell side intraday, early in the week probably, like on Monday or Tuesday. And the high, IFED high, should be really safe at this point because it formed an order block there. That has to secure the price and keep it below it. Alright, is the highest probability target for the week. Let's take a look at shit. What was it? Oh, I always forget this. DXY. DXY is pretty stuck right now. So last week's read is still actually on the chart. I was like, it's gonna be range bound here, then probably manipulate higher or range bound and rally. I think what we're looking at here right now on DXY is like it's really respecting both sides right now. So basically what that means is DXY is range bound, right? It's stuck. So for me, the highest probability to DXY, although I'm like fairly bullish on DXY, um, let's think short term here. Short term, because the price is stuck in between. I would say like I think it's gonna be manipulation first and rally, or it's gonna be manipulation to the highs and then rally to the downside. But so far, because it's range bound, I think you guys need to give her some time to show its hand. So far, it's respecting both sides with bodies, which should be good for Nasdaq, honestly. Because whenever DXY is range bound, Nasdaq is moving. It's kind of like Bitcoin DOM versus altcoins. I think that was that. I'm not sure. Like whenever Bitcoin is moving, the alts are range bound and vice versa. I think the real correlation between DXY and indices is like it's just like that. Now here's the interesting part. I was checking GU and Euro, which is like the reason I'm checking these assets is basically because I can get a read off DXY off of it, even though I'm not trading. So I want to see bearish Euro and bearish USD, GU, sorry. But let me actually pull up GU here. Okay, the daily though. So far it did its job. So this was the annotation from last Sunday. So far it did its job. So it rallied one more time. Euro did not break down though. Whereas GU, it rallied initially into the CE of the last manipulation wick and then broke down. And here it's that's the interesting part. So here it actually turtle souped the low, formed a rejection block, and that turtle soup is an S&T divergence, which is very interesting, honestly, because Euros had that rejection. So by looking at GU and Euro, I'm thinking like, oh my God, okay, these assets looks bullish. And I'm like, if these assets are bullish, what does that mean for DXY? So then DXY needs to be bearish, right? So if DXY needs to be bearish, what that means, what about indices then? You know, that's my thought process, how my thought process goes when I look at these pairs. Although I don't believe correlation between DXY and indices, honestly. So there's an SMT rejection at the CE of the fair value gap on Euro. GU is fairly weak, but overall, there's a shift in structure here, breaker block, and there's order block here, and a BPR. I think that's going to secure the price for a buy model. I think it's forming a buy model here because it failed. Same deal here. I think the high probability target for Euro became the SMT high here because that's the original consolidation now. And for GU, it's the buy side liquidity. Seems like it's forming a buy model here. And also, one more thing to mention here on Euro specifically, there's a trap here. Inversion fair value gap is being respected. There's a trap here. This kind of makes me want to trade this asset actually. So there's a trap here, which is essentially swung under reversal, trap shorts. And SMT divergence confirms the bullish order flow, basically. So I would say I would be looking at At least like fair value gap high. 3 drive failed to go down. Same deal. 3 drive did its job. Turtle swoop the low, and now it's time to run. Larry Owens is ICT's mentor. Ma- PLTR. Yes, let's take a look at PLTR. Have I have I had a discussion about Peloton? Not Peloton. Wait, hold on. I forget the fucking company's name all the time. What's the name of the company? Palantir. Palantir. Okay. Did I have a conversation about Palantir with you, or was it someone else? I think someone bought Palantir. We had a discussion with him. When it was like kind of choppy, I was like, you know what, dude, like, if you're not already in um, Palantir, just wait for the range equilibrium, which is the dotted line here, 20.21. It kind of gave a good reaction. I don't know if it touched it though. Low, no, it did not touch it yet. Came very close, but the problem is last week's rejection is that's massive. That is pretty massive. I would say because last week closed like this, I would say I would look for further manipulation if it makes sense. Instead of looking at the range equilibrium here, let me leave it actually. I would actually look for the volume imbalance here. That would be the real manipulation, and and basically a trap because everyone would think what this is going to zero, da da da. Well, it's shorted, and then immediately they probably will immediately reverse it here. Although the lows are very suspicious, but I don't think it's going to get down here. So 17 area, because I'm looking at the buy side buy model here. There's a buy model almost at 30s. Um, if you if it bounces off of the volume balance on the weekly chart, I think this has a very good potential, which is the 17s, like mid 17s, 66% return of investment. ROI, pretty massive. I think this is entering the second stage reaccumulation right now, honestly. Because here, what I'm thinking is, this is an internal range high, right? Which was taken out. This is also an internal range, though. Hold on 1 second. Let me think through this. We had a consolidation here, which is the original consolidation now, or smart money reversal. It broke out, retest the fair value gaps and volume imbalances and the breaker block. Rally. This is catfish though. So the first stage was catfish. I'm still thinking through this 1 second. And we have a range from original consolidation high all the way to the SMR, smart money reversal low. So again, it aligns with the volume imbalance. I think that will be the highest probability execution, honestly. Because like when I'm looking at this price action, this thick consolidation here, I think this should hold the price above it. So if it's really, really bullish, if it really wants to go to 30s or maybe like 30, 32s or whatever, I really think this thick price action shouldn't get violated. It should stay above, or like maybe like range EQ of this range. Let's see where that's at. Again, the same level. Everything gives the same level. That shouldn't be random. What do you have in mind though about Palantir? I think it's got 3 drive. That's a good point. So for me, uh, Fariz, I hope I'm pronouncing your name properly, man. Then I feel fucking ashamed of myself. Um, that comes from kind of Hollywood though, because they're a bunch of assholes. But anyways, So here's what I'm thinking. So I'm thinking this is definitely going to tag to volume imbalance. Okay, that's not a question for me. The question is, when it gets down here, is it going to reject the 17.5, 18 level or not? Because what I preferably want to see here when it trades here is basically wick, body close above. Then maybe do it one more time, wick, body close above. And then that would be a bullish signal for me, that kind of rejection. But if it doesn't react, obviously, like we are looking at all these lows, like 100% it'll go there. It'll probably like form a fair value gap here, retest, and that retest will be short into 13.52. Very conditional. You know what I'll do? I'm gonna set an alert here that I'm gonna start watching this stock. Overhead supply. Head and shoulders, crazy obvious divergence 2, a divergence 2, back in at 7, gap fill, harmonic around 18. It's the same level, right? With the harmonics. So we'll see. If it loses that like 17 point, like high 17s, low 18s, bye bye. It's a bye bye. It'll be seeking this liquidity for sure. And then it might bounce from one of these fair value gaps because like maybe OTE of this range. I don't look at OTEs, but just because it's a buy model, I think it's going to complete it, and also the manipulation at the lows already happened, so I don't think it's going to go for the all-time lows, but instead it'll seek a deep discount, OTE of the range. One of these fair value gaps probably going to react to that and rally. But I don't favor that. I would rather have a clean order flow here at the range EQ. Lots of back holders in this one. So I've heard. So I've heard. Same deal with Tesla. There are like a lot of people holding Tesla, and Tesla's basically like I'm so glad I didn't enter this, but it's pretty like manipulative right now. I think it's gonna bounce, but the question is when and where. So here's the thing, like compare this chart with Palantir. It looks almost quite literally the same. You have a buy like original consolidation here. Price rallied, almost tagged the buy side, original consolidation, the buy side, right? Then it broke down, shifted the structure. So the thick price action on Tesla is this one right there. It broke below it. So it seeked extreme levels or like extreme discount or OTE or whatsoever, and it had a kind of a big bounce. So Palantir can do the same thing if it doesn't hold the range EQ. Basically, that's my argument. And I don't believe it'll reach down to all-time lows. Same thing with Tesla. I don't think it's going for that. And I was looking at PayPal as a potential long, but it doesn't have a confirmation just yet. Still rejecting the CE of the weekly, what is it, the weekly fair value gap. I want to see a displacement above it before going long in this. So I can see this going for the 122 level, but it's not there just yet. Too long for executions. Requires more data, more time, less consolidation, more clean order flow. So, but I'm watching this. Let me actually set an alert here again, because I don't think so. It already failed to break out of the CE of the fair value gap 1, 2, 3 times. I don't think the fourth time will be a failure, honestly. But we'll see. So many like Twitter stocks accounts trying to get it below. I know. You know what? I gotta admit this. The reason I looked at PayPal was because on my timeline, this was like months ago though, on my Twitter timeline, I was seeing PayPal almost like every day, 20 times. I'm like, hold on, let me look at this. Maybe there's something going on. And I looked at it and I'm like, shit, this could be potentially, not yet, but potentially a manipulation. And if that's manipulation, this is gonna like rally like like a beast. So I added this stock to my watch list, and I'm watching it closely because I also promised my dad that I'm gonna give him some calls, stock calls, and he's like, so he texted me actually 2 weeks ago on Tesla because I mentioned in Tesla. He was like, so at like 144, 145 levels, he's like, "Oh, I was about to buy Tesla, but I missed it at like 145." I'm like, "Dad, did I tell you to buy it yet or no?" He's like, "No." Then it's not a buy yet. You did not miss anything. It still has time. I'll tell you. Don't worry about it. And he's a guy who earned a lot of money from stocks, by the way, like back in early 2000s and mid 2000s or something. But he definitely doesn't know what he's doing. It's probably like he's a baby boomer. You know how they trade. They trade fundamentals and stuff like that. But he was successful in stock markets for somehow without knowing any technical analysis. I don't know if it was luck or whatever, because I don't know what he did. I just know he was profitable a lot. He made a lot of money, which is how he sent me to the West Coast in the first place. That's not an easy transaction, a transaction with transition for any family, really. Um, any other stock you want me to look at for these, or anyone else? I'm gonna have to paint the indices for the channel because I think I didn't, or I failed to record the audio initially. I think Wolf Speed has a pretty nasty 10-year Wolf Speed? Is that a company? Wow, I never looked at it or heard of it, honestly. You see, this is the price action I'm talking about on PayPal, SQ, and what's the other one? Oh, I think it's no, QS. Yeah, QS. This is the type of price action I'm talking about. Or like, actually, let me show this one right there. This looks better. Here, it runs the lows, like consolidates a lot, runs the lows, and the one wick does its job, and that becomes literally the bottom. So here is the same deal. So when I'm looking at QS, I'm like, holy shit, this could be something. Ran the low, one time rejected, second time rejection, and ran it again. Now, if it could, starts displacing higher or starts moving, it'll yield a lot of return of investment. It'll yield a lot of money. So I'm like, okay, I'm gonna add this to my watch list. I'm gonna watch it. There's no confirmation yet on this, but same deal with what was the asset? Say it's here, Palantir, and what's the other one? PayPal. Needs confirmation though. Look at this one, for example, SQ. If it could break out of the previous accumulation, it's definitely looking for all-time highs. This literally looks like Bitcoin chart on the weekly. It's literally the same chart before all-time high happened. So these stocks are like I'm watching highly. So Tesla, oh, let me make it green. Tesla, SQ, PayPal, um, QS, Palantir, and the other one, Wolf Speed. I think you said Wolf Speed. Let me look at it too before I forget. Oh, so Wolf Speed. I mean, on the weekly, I can see this literally like being range bound at least one more year, and then make a manipulation and rally, like Chainlink. You know, I give that example a lot, but um, if this could like, if this could manipulate the lows before any displacement, any rally to the upside, I think we're looking at least these highs, which is 125 from $25 per share. That's, you know, I would say this needs to form a smart money reversal. So first things first for me, before I go long in this, I would at least wait for the weekly CB or fair value gap being violated here, because that might confirm, depends on how it rallies, but it might confirm a potential smart money reversal. So if it displaces with like one candle or something, very energetic, then I'm like, okay, there is a smart money reversal. There's a buy model here, and the buy model draw on liquidity would be 125. A great catch, by the way. I haven't even heard of this company before. It's me first time looking at this chart. Um, my dad, 10x stock. I know, bro. Dude, like, I don't know how and why, not why, but how they did it. Like, I had a conversation when they were here visiting me a couple, like last month. We were talking about, because I showed him what I'm doing, and he was like, you know I made a lot of money from stocks, right? I'm like, no, this is your first time telling me this. He's a very mysterious guy. Like he doesn't share a lot with me or with my mother and stuff when it comes to business. But he did this time, and I'm like, how did you do it? And he was like, I don't know. I was trading fundamentals, and I was lucky, I guess. What do you think about this, Nazmi? Let's see. This is the XY chart. Okay, so I'm not sure about US. Oh, US 30Y is what bond? Is it bonds? Bonds yield. I'm not sure if they correlate with like that with divergences. I don't know. Never heard of that. But here's the thing, though. I think I mentioned this on DXY. So on DXY, even though it's kind of stuck right now, I can see this being a trap longs essentially here. So if that's the case, and it's respecting right now, kind of looks like crude oil last week. So it could break down. But the problem is the VXY correlation with Nasdaq or indices in general. Like I really don't believe that. Like I don't think bearish DXY doesn't necessarily mean Nasdaq will see all-time highs. If that was the case, yeah, I would be very confident, honestly. But I think it's not that easy when it comes to correlations. I mean, with forex currencies, yes, it is because US DXY is essentially a US dollar index, right? Um, but Nasdaq and stuff, not so sure. But yeah, I agree with you on that, Nazmi. I think that's a good analysis, but I personally would look at the trapped shorts low because if this is forming the sell model, which it looks like it is, but right now it's just stuck. If it could break down, I think the drawn liquidity would be the trapped shorts to complete the sell model. Those stocks that break the IPO low are scary as I know, right? I don't even know if they could do something after breaking the IPO lows. Market makers will spend the money. I think those stocks are just Ponzi schemes, honestly. They just ran it, made money, dumped it, basically. Like GME and stuff, basically the same shit. Um, do you just trade Nasdaq chart or take into consideration fundamentals? I don't look at fundamentals at all. I did that before, and I feel like, no offense to anybody, but I feel like fundamentals is just a waste of time. I used to look at balance sheets. I used to look at um, a lot of. I don't even remember what I used to look at, but I remember looking at balance sheets for sure. And guess what? Like, didn't really work that much for me. Not MACD. No, 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 no. Actually, yeah, I was trading MACD. I was trading RSI. I was trading EMA. So I had a strategy. So I'll show you that strategy. Actually, it's pretty funny. This is technical strategy though, not fundamentals. But like, I had a strategy where I was trading stock options, not stock options, rather index options. I used to use this is basically a scalping strategy. So I had EMAs on my chart, very simple. So EMA, double EMA. Oh, Where is the double EMA? Okay, so I used to put 9. Where is it? I don't even see it now. Like I put it, yes, but I don't even see it. Okay. So hold on, not double EMA though. EMA. Oh my God, I got excited for a second for some reason, bro. More average exponential. Let's put it twice. So I would put 8 EMA, then I would put 9 EMA, and this is literally what I would do on either 3-minute chart, and don't ask me why 3-minute because I don't know, or 6-minute chart. Okay. So let's look at it on 3 minutes, for example, because it works until it doesn't. So let me make it yellow, not yellow, that looks bad. Make green. Oh my God, I got so excited for some reason talking about this. So I look at the 3-minute chart, right? The thing I would do is the moment break out of the EMAs, I would buy that and I would sell with the break below. So this candle, I would hold it all the way, I would ride the wave, and the break below the EMA, I would close the trade. That was the strategy. So here, for example, I would buy this candle, hold it, hold it, hold it, close below, sell. So it broke down, sell it, hold, 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 hold all the way down. We're here. I mean, I would also wait for candle closes though. So in this case, here I wouldn't sell it, but here, because it closed above, I would sell my short, close my position. And this was so easy though at the time. Like so, it's zero DT SPY options, or SPX options, or Qs, or whatever. Oh my God, it brings so much memory. I wouldn't look at the crossovers though. It was just there for me to see whether we're trading above or below, basically, and I would ride the wave, if that makes sense. It feels like the more I learn, the dumber I get with this stuff. It's so comp. I know, right? I don't even remember the divergence between RSIs, MACDs, and all that jazz. I don't remember it, and I don't even remember the chart patterns. Also, the only thing I remember is obviously head and shoulders and reverse head and shoulders and all that. But if you ask me what a bull flag is or a bear flag is, although I used to trade it, I don't know. Or a pennant, I don't remember what it is, and I don't remember how I traded it. I think I really don't know. Like for me, I think this is a bull flag, right? I don't know. It looks like a bull flag, or is it, I don't know. Um, then I used to look at, I don't know what this one's called, but so it's like a perpendicular triangle. So here, resistance, right, and price gets tighter and tighter and tighter and tighter, and then eventually breaks out. This was my favorite chart pattern at the time. I don't remember the name of it though. So price gets short, becomes shorter, 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 and then breaks out, retest, and that will be a long for me. I used to do this was my favorite, and along with Head and Shoulders, because Head and Shoulders is very easy to see, but I never found success or profitability with Head and Shoulders alone or chart patterns. If you have 100 time frames and 20 different EMAs, how can people use that to trade? It's not, dude, I know, right? You used to talk about, so I had a team. I was in this Discord server at the time. Everyone was like options trader, there were analysts and stuff like that. We were all trading SPY or Qs generally, options. So almost everyone was using this EMA strategy for scalping, but the problem is everyone was looking at different time frames. Like for me, so I'm looking at the 3-minute chart, right? I see this trading below the EMA, but on maybe like 5-minute or 1 minute, it's not gonna look like that. It's gonna be above that EMA. So that used to cause a lot of confusion. And these guys were telling me, no, it's above EMAs, no, it's below EMAs. Bro, shut the fuck up and train your own strategy. You know what I mean? It was so complicated, yet it was so easy. It's actually easier than ICT itself. ICT's strategies itself, or harmonics. Harmonics, I think, like I've never got into harmonics. Like I saw your chart earlier today, for these the harmonic chart on Nasdaq. I'm like, shit, what does this mean? What does that mean? I don't know how to read that, but it looks good though. It looks really like it looks like an art, so to speak. if that makes sense. I always have this like um, respect to harmonic traders, whether it's it's whether it's a good strategy or bad strategy. It doesn't. It's not been my business, but the charts itself looks so cool, very complicated, very like kind of reminds me of like my physics class in college, like ABC patterns and like for example, what is PRZ? Does it stand for anything or potential reversals? All that makes sense.